The ability to simplify means to eliminate the unnecessary so that the necessary may speak. Hans Hofmann. Think about that. That is separating the signal from the noise, letting the necessary speak by getting rid of the unnecessary. That's what we do here with these charts every day to find price movement in trends. Long-term trends are your best opportunity to make sizable amounts of money in the marketplace. That's what we look for. Our weekly vertical crossovers, the most powerful things we have on our charts. That's what we follow. Folks, if you're interested in becoming wealthy in the marketplace, you have to be able to find trends and follow them. We're not talking about trading pennies in day trading. We're talking about dollars, hundreds, thousands, millions. How do you do this? How do you start? Well, you don't start by spending money. You start by doing practice trades. That's what we talk about. 10 to 15 minutes a day is all it takes. We have a special training for you for everyone who is a subscriber to Charting Wealth. How do you subscribe? You go to chartingwealth.com, sign up for free. You will see in your show notes a special training we have on the Heiken Ashi candlesticks, most popular training we've ever put out. 120,000 people or so have taken it. We want you to understand these Heiken Ashi candlesticks, very important part of what we look at along with the price percent oscillator. And again, we put these trainings out every day in addition to the daily review and forecast. We always put a special training with that. And we want you to be with us each and every day. If you haven't purchased our book, guess what? It is available. We're in the 11th printing. We'll send you out an autographed copy. Look in the show notes. Whether you're listening to us, you're watching us on YouTube, you're watching us on Facebook, you're getting the show that we record every day on your email by subscribing. You'll see in the show notes a link to our Square page where you can order the book. We'll send it right out to you. We appreciate the thousands of people who've purchased our book from us. And that is really your best way to sponsor what it is we do here. In addition to our Patreon members. Don't forget, Patreon members, we have a live question and answer call-in for you this Wednesday, 12:30 Eastern Daylight Time. If you are not a Patreon member and you want to participate in that call-in, you need to become a Patreon member. Again, follow the link in the show notes. You can become a Patreon member. You need to do it quickly so that you're able to join us on that monthly Q&A. Again, be coming up this Wednesday, 12:30 Eastern Daylight Time. We will make sure to get you out the code and the telephone number so you can participate. All of our members, please check your emails. If you have not seen the emails we've been sending out, then please check your spam filter. We want everyone to join us. It's always an exciting and fun time. Also, Patreon members, go ahead and email us the stocks and ETFs you'd like us to review for you this month. We'll put out that special training later in the week or beginning of this next week for you. Now, let's jump into these charts. S&P 500, we see stocks pulling back on the day. Now, when we go to our weekly chart, we can see that we're going into our 5th week of up movement. Yes, it was a down day, but the Heiken Ashi candlestick showing the average pace is up. Price percent oscillator still going up. Derivative oscillator up. Price is well above that weekly trend line. We go to the 2-day chart. What do we see? We see that price, even though there is a bit of a slowing in price movement, we have a red open box candle with a wick on top. Price is still above the 2-day trend line, above the weekly. Price percent oscillator still going up. Derivative oscillator losing some momentum. Now again, we go to the 4-hour chart. What do we see there? Well, of course, that 4-hour chart crossed over going up back on Monday the 1st. Jumping in point would have been Monday afternoon, somewhere around the opening at 294.77. And of course, things popped up very quickly to a high of 298.82 and then started sliding sideways. Warning bells went off big time when we saw things push through the 2-day trend line back on that candle ending Monday. Ending actually this Monday the 7th. That's when our warning bells went off after we had things popping up quite nicely on Wednesday. And then we saw things slide sideways on Friday. And then, of course, this morning, things really popped over. Don't have a crossover going over yet, so you don't have to have pulled that trade. But, of course, your best opportunity for capturing that up movement was prior to the afternoon. So again, keep that in mind. Doesn't mean you have to pull it at this point. Could bounce right off that. We just started the new week. But again, watch and see where that's leading. You don't want to lose what you have already gained. Where did things end for the day? 296.82, still up $1 or $2 from that jumping in point. So again, things are still positive, but again, keep your eye on the prize. We don't have to let that 4-hour chart take us out of the trade, but again, keep your eye on where things are going. We still see that 2-day chart is okay, just pulling back. So continue to watch, see what there is to see, learn what there is to learn. We go from the S&P 500 to the Qs. What do we see going on the Qs? Well, we see again a bit of a backing off as the week starts. Price again is slowing in its up movement. We have a red open box candle. We did have a weekly vertical crossover. We do see that the price percent oscillator is heading up. Derivative oscillator is now positive as the week starts. We're looking for a jumping in point. We'll talk a little bit more about that in a minute. We see that that weekly chart is, price is still right there above it. Same with the 2-day chart on the weekly. We go to the 2-day. What do we see there? That's where we see price above it. We see that we have a red spinning top, and it's an open box. So again, it means indecision, tending down, not as down as a closed red candle. Price is above the 2-day, well above the weekly on this 2-day chart. We see that the price percent oscillator is weakening, derivative oscillator is weakening. But again, what's happening with that 4-hour candle? Didn't have a jumping in point, did we? What we saw was down movement in the morning, more down movement in the afternoon. Remember, I had that weekly vertical crossover on Friday. We're hoping for a jumping in point. What does it mean since we don't have a jumping in point? We actually have a crossover going down on the 4-hour chart. What do? It means we wait till we have a crossover going up on that 4-hour chart. Then we would look to jump in and ride that train to virtual profits. Hasn't happened yet. Doesn't mean it's not going to happen. It may very well. We'll watch the charts and let them lead us. What's going on 20-year bonds going into the, well, I mean, if you look at bonds, let's go back in time, my friends. Look how far back it was, and we had the last crossover going up on bonds back on the 30th of November of last year. Is that not amazing? Went up for several weeks, sideways for several weeks, up for 3 weeks, then sideways and down for 5 weeks, and then up since about the 10th of May. We have seen things moving up, 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 up. Now, we see that bonds are up just a little bit for the day, 0.14%. We see that that price percent oscillator, it's hard to see it there, going to back off, is about flat, just dead flat. Derivative oscillator losing upward momentum. Derivative oscillator actually peaked all the way back on the 21st of June. We go to the 2-day chart. What do we see there? Well, we had a big bump up on the 3rd. That was the 2-day candle on the 3rd of July. And then representing Friday and Monday, a red down candle with a big old wick on the bottom pushing through the 2-day trend line. Actually, the wick pushing through the weekly. We see the derivative oscillator's gone negative, and guess what? We have a crossover going down on the 2-day chart. It's been a long time since that happened, but it has occurred, which of course means that as far as us being in a trade, that is a big problem for us staying in or being in any kind of up trade with that confirmed crossover going down on the 2-day chart. We go to the 4-hour chart. What do we see there? Well, we see price moved up above the 2-day trend line, then dropped back through it at the end of the day. So again, 4-hour chart is negative. The 2-day chart is now negative. The weekly chart is up. Have bonds gotten to the end of their run? Don't know that yet. That won't be called until and unless there's a crossover going down on the weekly. And that hasn't happened for many, many months. So we'll continue to keep our eyes on bonds, see what there is to see there. Now let's go back to gold. We are so waiting for gold to cross back over going up. We see that the weekly had just reached all sorts of crazy, up to 135.55. And then down, sliding sideways. This week's opened up weak, down 0.64% to 131.29. Derivative oscillator losing momentum. Price percent oscillator still heading up. We go to the 2-day chart. What do we see there? A big down candle. Again, after sort of a sideways slide, knocking down. Now, it hasn't dropped all the way down to 130. 130.35. It ended the day at 131.29. And we see that the 2-day price percent oscillator is heading down. Still positive, hadn't crossed over, but price percent oscillator heading down, derivative oscillator losing momentum. Go to that 4-hour chart. What do we see there? Well, let's continue to keep an eye on things, but do you think gold might go down somewhere to around the 131, the 130.50 mark or so and bounce off? Maybe it might do that. We're going to keep our eye on things, see what there is to see. The price percent oscillator still heading down, derivative oscillator still heading down. We don't know when gold might bottom out, but perhaps it will. And if it does and bounces off, if it finds a floor somewhere around that 130.50 to 131 mark, that would be wonderful. Crosses back over going up on that 4-hour chart before that 2-day chart crosses over going down. Then, of course, we'll be ready, willing, and able to jump in on that trade and do a hopefully successful practice trade there. So we got interesting things developing. We'll continue to watch, see what there is to see in these charts. Remember, still ready for an up move on the Qs and an up move in gold. That's where we are, folks, as we end the day on Monday. Get ready to go into the rest of this week. Hope you had a great holiday. For all of our friends in the United States, we're back to business. And again, waiting to push through this summertime trading zone and get into that fall-winter trading zone when the getting gets good. Folks, that's where we are. God bless. All the best from the whole team here at Charting Wealth World Headquarters. Don't forget, Patreon members that call in on Friday, 12:30 Eastern Daylight Time here in the States. And if you want to be a Patreon member, follow the link in the show notes to become one. If you haven't purchased our book, please do so. God bless.